It is a good morning for ZIM stockholders. The company announced their earnings before the market opened today on August 19th, 2024. Overall, the news is good and the stock price is up. The company grew their revenues because they grew their volumes as well as shipping rates were better than expected. That combination really drove up revenues, profits, and the company raised their dividend. They also achieved a greater free cash flow rate than I expected, which is going to improve the valuation for ZIM. Overall, this company was pretty much left for dead a couple of years ago after they peaked during the big supply chain issues that we had a few years ago. But I thought they were a good stock to own because they had really improved their fleet with better ships so they could be more efficient, more competitive. And that strategy is playing out to be a big advantage for this company. Let me take a look at the earnings and go through, highlight what I'm seeing, update my valuation for the company, and let you know what I plan to do with this stock. Am I going to buy more shares, hold, or sell my shares? What is my exit strategy with this stock? So overall, the dividends were really positive. It's really goes to show that ZIM is in good partnership with its stockholders. They did what they said they were going to do. They were conservative in their guidance, and now they're actually improving their guidance going forward. Overall, the big highlights are that volumes did go up quite a bit, and the rate of which they're charging to move freight has really gone up as well. Overall, their new fleet is really showing up. It's more efficient. It runs on natural gas. And in some ports, it is the only type of fuel that's allowed. They don't like really dirty burning ships. So that's all positive. Revenue grew in the second quarter of this year by 48%, just a very, very high growth rate. Net income, $373 million. EBITDA went up 40%. Margins went up 25%. Cash flow was up 124%. Total liquidity went up and equity went up as well. So just really an A plus earnings report from ZIM. Using the updated earnings that I got in the Q2 earnings release, I was able to update my valuation of ZIM using their free cash flows as well as their earnings per share. Let's start with free cash flow. To be very conservative, I'm just taking the first half of 2024. They had free cash flow of a little over $1 billion. I'm going to grow that by 4%, and terminal value will grow at 4% as well. So it's a nice conservative forecast. There's ups and downs in shipping, so let's just go conservative. The discount rate is 12% since it's a non-US company, and it's also in a higher risk industry. When I discount all those free cash flows by 12%, I get a net present value of 11.6 billion. And the cash and cash equivalent amounts on the balance sheet are 2.3 billion. Total debt is 5.5 billion, and an equity value is $8.4 billion. Market cap is just 2.6 billion. So there's just a big difference between the value of their cash flows and what the company is being traded for on the street. Earnings per share are coming in really good this year. And I'm just using a PE of 12, which is reasonable. They're a growing company, and a 12 should be reasonable. It's expected that rates are going to drop, and the reason for it is shipping rates are not going to stay at these levels forever. There's more ships that are coming into the market to compete for those rates. So the earnings per share, I expect, is going to fall by 50%, and that's going to reduce the earnings per share from a very high number to a lower number. Even using a growth rate, a negative growth rate of 50%, the value per share is still $34. So compared to the current stock price of $21.81, and that's in the pre-market, it's discounted by 59%. So overall, it's a stock that's being discounted by 166%, and it's a very good rebound stock that was once valued very high, got sold off by 92%, and is now trading up and rewarding investors that believed in the company. So what is the desirability of the ZIM business to me? Let me make that determination and rank these guys. If you see my videos, you know that I've created this quadrant of 4 desirability quadrants. The best companies are in the green. These are almost monopoly-like companies that have very few competitors. They have very strong moats and barriers of entry, so they can really grow their businesses, be profitable, and generate cash. The worst businesses are those that have too much competition. They don't make much money. They don't make any free cash, and they're just really on their way into being either bankrupt or non-relevant. And then in between, there's good companies and good industries. If they're operated well, they do well. And in these zones of gray, I have to get a really nice discount on those companies in order to see my stock appreciate and reward the investment I'm making. I think that ZIM is clearly in the gray. It's a company that operates ocean logistics, shipping of goods, from China to other places and other places all around the world. And it's something of a necessity. We're not going to get away from that. I think it's made the global supply chain very efficient. Consumers like the prices that we get based on the international trade. So ZIM will continue to have strong demand. There's plenty of competition out there, but it's not very easy to set up a shipping company. You have to know what you're doing. You have to order the vessels, put them into service, and then operate them effectively. ZIM's definitely doing that very well. So I'm happy to invest in this company because they have such a discount on their stock. My investment in ZIM is going good so far. I really picked a low point of beginning of my investment. Then I dollar cost averaged my investment in ZIM and bought shares as recently as August and July because there were some pretty good pullbacks in the stock. Overall, I've invested $15,476. The value of those shares is $26,508. So there's a 71% return in appreciation terms on this stock, and that doesn't include the dividend they pay. I have an exit strategy of selling this stock when it reaches $30 per share. It's currently at $21.64 in the pre-market. I think it could get there quite quickly or maybe over time. But I think the market's beginning to recognize that this company is a real good one. It's really unappreciated and underpriced. For now, I may buy a few shares on pullbacks, but I'm probably just going to hold my shares and watch it appreciate to some extent. I'm happy with the company. I think it's a very good company, and I'm really glad I made the investment. Thank you for watching the video. I appreciate it. Just keep in mind, I'm just an individual investor sharing my analysis on YouTube. I'm not recommending you buy, hold, or sell ZIM. I'm just sharing my analysis. Please make your decisions on your investments independent of this video. Thanks again for watching. Good luck investing.